Have you ever seen this before? Two traders looking at the exact same chart, both using Fibonacci, but somehow they end up with completely different levels. So, who's actually right? Here's the interesting part. It's usually not Fibonacci that's wrong. It's where they draw it. And that one mistake can change everything. In this lesson, I'll show you how to identify high-probability Fibonacci retracement zones using the price action framework. So, let's dive in. Before we talk about Fibonacci, let's go back to the chart from our previous lesson. If you've already watched the role reversal lesson, this chart should look familiar. If you haven't, you can watch the full lesson on my YouTube channel, Price Action Framework. That's where we cover the complete price action framework: structure, location, context, and confirmation. It'll make today's lesson much easier to understand. Now take a look at this. This wasn't just a role reversal. It also lined up with the channel resistance. So now we've got two different tools pointing to the same area. That's what we call confluence. But here's what makes this setup even more interesting. What if we had one more reason to focus on this exact area? That's where the 61.8% Fibonacci retracement comes in. But before we use Fibonacci, we need to answer one simple question. Which swing should we actually draw our Fibonacci from? Let's take a closer look. All right, let's zoom in and take a closer look at the euro-dollar chart. Here's the mistake I see all the time. Many traders think Fibonacci doesn't work, but that's usually not the real problem. The real problem is that they're drawing it from the wrong swing. Take a look at this chart. Here's our swing high, and here's our swing low. Since this is a downtrend, we draw the Fibonacci retracement from the swing high down to the swing low. Now look at the 61.8% Fibonacci level. Can you see what formed there? It's a shooting star. Now, it may not be the perfect textbook shooting star, and that's perfectly okay, because we're not looking for perfect-looking candles. We're looking for price action at the right location, and that's exactly what happened here. The shooting star formed right at the 61.8% Fibonacci retracement. Now let's put everything together. We have the structure, a shooting star. We have the location, the 61.8% Fibonacci retracement, and we have confluence, the role reversal, the horizontal resistance, and the channel resistance. When multiple technical factors point to the same area, the setup becomes much stronger. Now, this example is actually quite straightforward. The swing high, the swing low, and the Fibonacci are all easy to identify. But real charts aren't always this clean. Most of the time, you'll see multiple swings and several possible Fibonacci levels. So in the next example, I'll show you how to identify the correct swing, even on a much more complicated chart. Let's move on. Now we're looking at a much more realistic chart. There are a lot more swings on this chart, and that's exactly where most traders get confused. But don't worry, by the end of this lesson, you'll know exactly how I identify the correct swing high and the correct swing low. So let me ask you a question. If this was a live chart, and all you could see was this shooting star, would you take the trade? Think about it, because one candlestick never tells the whole story. Before I enter any trade, I always check one thing first: the location. So here's what we're going to do. I'm going to hide everything that happened after the shooting star. From this point on, we'll analyze the chart exactly as if it were happening live. No hindsight, no cheating, just pure price action. Let's find out whether this is really a high probability setup. All right, let's work through this chart together. For now, ignore everything else on the chart. I only want you to focus on two things: the swing high and the swing low. Let's start with the easy one. Can you spot the swing high? That one should be easy to identify. The highest completed swing is our swing high. But here's where most traders get stuck. Which one is the correct swing low? This one or this one? Take a moment and make your choice. Because if you choose the wrong swing low, every Fibonacci level will be wrong. And once the Fibonacci levels shift, your entire analysis changes. So, which swing low is actually correct? Let's take a look. So, which one did you choose? The correct answer is this one. But why? Because this swing low completed the most recent downtrend before price started to retrace higher. And that's the key principle. Fibonacci is designed to measure the retracement of the most recent completed swing. That's why we ignore the earlier swing low. It belongs to the previous price movement. Now that we've identified the correct swing high and the correct swing low, drawing Fibonacci is actually very simple. Since this is a downtrend, we draw from the swing high down to the swing low. The top is 1. The bottom is 0. Everything in between is the retracement, and that's it. The Fibonacci levels appear automatically. Now, take a closer look. Which Fibonacci level lines up with our shooting star? The 61.8% Fibonacci retracement. But remember, 61.8% isn't a buy signal or a sell signal. It's simply another location. And when that location lines up with a shooting star, a role reversal, and channel resistance, that's when a high probability setup begins to take shape. Now, let's put everything together. Imagine you're looking at a live chart, and suddenly a shooting star appears. Would you take the trade? Not so fast. Before making any trading decision, I never rely on the candlestick alone. I always check the location. Let's go through it step by step. First, here's our swing high, and here's our swing low. Since this is a downtrend, we draw the Fibonacci retracement from the swing high down to the swing low. Now take a look at this level. This is the 61.8% Fibonacci retracement, and notice exactly where the shooting star formed, right at the 61.8% Fibonacci level. But that's not all. Price also rejected the upper channel resistance, and at the same time it reacted around a previous horizontal resistance zone. So this isn't just Fibonacci. We now have structure, a shooting star, with a long upper shadow, showing rejection from higher prices. Location, the 61.8% Fibonacci retracement. Confluence, the upper channel resistance, and the horizontal resistance zone. That's exactly what we want to see. When multiple technical factors point to the same location, the setup becomes a much stronger candidate for confirmation. This is the difference between trading a candlestick and trading price action. Here's another example. Notice what happens around the 61.8% Fibonacci level. Price doesn't reverse immediately. Instead, it forms a series of dojis showing hesitation and repeated rejection from higher prices. Now, you might be wondering why I pay so much attention to the 61.8% Fibonacci level. Not because it always works. No Fibonacci level works all the time. Over the years, I've found that when price retraces to around the 61.8% level and repeatedly shows signs of rejection while lining up with other technical factors, that's the type of setup I'm most interested in trading. That doesn't mean 0.382 or 0.5 aren't useful. They absolutely are. But personally, 61.8% is the first level I pay much closer attention to, because at the end of the day, I'm not trading Fibonacci, I'm trading price action at a meaningful location. Before we wrap up, let's quickly recap today's key takeaways. First, always draw Fibonacci on the most recent completed swing. Second, remember that the 61.8% level is a potential reversal location, not a buy or sell signal. And finally, Fibonacci works best when it's combined with strong price action and technical confluence. That's exactly why I don't trade Fibonacci by itself. I use it to identify high-quality locations where I can then look for high-quality price action setups. If you found this lesson helpful, don't forget to subscribe to the Price Action Framework YouTube channel so you won't miss the upcoming lessons in this series. In the next lesson, we'll explore measured move completion, another powerful location tool that often complements Fibonacci when identifying high-quality reversal locations. Thanks for watching, and I'll see you in the next lesson.